Singapore consumers and businesses may benefit from lower interest rates ahead. This as the US Federal Reserve, of course, cut those interest rates, citing concerns over a global economic downturn and increasing uncertainty. Some economists are also expecting more rate cuts ahead. Brandon Tanoto explains.
After months of anticipation, the US Central Bank lowered its key overnight lending rate by 25 basis points. It's the first rate cut in 11 years, and the move will likely have an impact in Singapore. That's because Singapore manages an exchange rate-based monetary policy, pegging the Singapore dollar to a basket of currencies, of which the US dollar is a primary component. That means that interest rates in Singapore are closely tied to interest rates in the US. That means when Singaporeans borrow money from the banks, the loan could be repaid at a lower interest rate. These loans include home mortgages, which are often tied to floating rates. These are usually pegged to the Singapore Interbank Offered Rate, commonly known as SIBOR. However, one economist cautioned that the impact of the Fed rate cut on the SIBOR might be muted.
We do expect, even if the SIBOR does come down lower, the movement may not be great. We expect the 3-month SIBOR to end from currently around 2% to just about 1.95% by the end of the year.
A lower interest rate environment bodes well for businesses too, since borrowing costs are also lower.
From a business owner perspective, right, before they make an investment, for example, they'll have to determine what sort of returns they could get from the investments. And if, let's say, your returns is, say, hypothetically 4%, right, and your funding just got cheaper, right, that return will look that much better. Hopefully it helps to encourage, say, businesses to invest.
Economists also expect Singapore's central bank to ease its monetary policy in October.
Looking at the growth outlook, not just for Singapore but from the region itself, I think most central banks have a easing bias, or already in some cases, many cases, cutting interest rates. So looking at the downside from the growth outlook as well as the worsening output gap, that puts MAS in a position probably also to join the easing bandwagon.
Looking ahead, both economists are expecting the US Federal Reserve to make at least another rate cut by the end of this year.